Page, former parliamentary budget officer. I'm not even going to put a pointed question to you. You've seen the document. I just want your reaction on this, Kevin.
Yeah, thank you very much. I'm sort of working my way through the document. It's the first reaction is I've never really seen a document like this before in my lifetime. It's very different from the point of view of an update, a mini budget. I think it reflects the times where there's just massive uncertainty, and so we've actually seen finance prevent scenarios in a way I've not seen before. And I think some of us were wondering whether we'd see a 5-year outlook. That maybe that we'd see a more of a short-term focus like we saw in the snapshot, the document released a few months ago. So. Yeah, it's very different, and I think kind of almost like a fiscal policy forward guidance from the point of view of really telling people that around like scoping of what a size of a fiscal stimulus package could look like over the next few years. So, a very different document than we've seen from finance in my lifetime.
I love the way you put that, Kevin, in terms of forward guidance. We're used to talking about central bankers in that respect, and now we're talking about getting economic fiscal updates. Basically, this is a mini budget. This has got more meat than some budgets I've seen. Let's talk about that idea of the stimulus. I mean, that's an astounding number just to throw into a document, say $100 billion over 3 years. We'll get you the details later. I mean, in any other time, apart from these strange times we're living in, that number would be mind-blowing.
Yeah, it would be mind-blowing. If you put it in perspective, I think, to what we experienced in 2009 and 10, where we had stimulus packages in the $20 to $25 billion a year for 2009, 10, 10, 11. Some of it spilled over into 11, 12. So it's a bigger stimulus than that package. I think the forward guidance they're really telling people that they're prepared to see a debt to GDP ratio go well north of 55%. Which is, pretty big difference from where we were, say, in 2019-20 at around 30%. But they're prepared. So we can look at debt two ways. One, we can look at it. This was the backstop for the economy in 2020-21. And then there's additional debt that we're going to need to take on to really to strengthen growth, make growth more inclusive, over the medium-term outlook. So I like it from that point of view. I think it sends strong signals to the Bank of Canada in terms of the role of fiscal policy in supporting growth in the future. I think for people that are going to hold debt, for bond rating agencies now, they're starting to set expectations, but they're doing it in a way that really is more about generating debate. Again, it's as you say, it's $20 billion, but it's not defined, or annually, or $100 billion over 3 years, but really not defined as to how that will be allocated.
Right. So, Kevin, that leads me to ask you, when you say that this looks like it's supportive of growth, specifically, what are you referring to?
Yeah, I think there's some of the tables, again, the chapter 3 part of the document, middle of the document, that goes to sort of the depth of this recession relative to other recessions, how long it's going to take us to get back to pre-COVID levels of GDP, in the labor market. So I think they're framing the case that, in this environment that they're going to need, some kind of, longer term sort of stimulus. So, I guess in their scenarios, they've taken a base case from the private sector, and then they've added 2 more pessimistic scenarios, and then multiple scenarios for stimulus. So, again, we have enormous monetary policy accommodation or stimulus, and I think the federal government's saying that they not only are they going to prepare to backstop the economy in 2020-21, but they're prepared to pump prime it as well, like over the next 3 years.
So pump and prime it. So, the message in terms of backstopping your economy is often a good one, or certainly has been in the past number of months. Obviously, 2020 is what I'm referring to, and also, of course, the financial crisis. But there also has to be a bit of prudence and a plan for prosperity. Did we get that?
No. I think the document wasn't really set up that way. I think there's references to a discussion around appropriate fiscal anchor for the medium term. Again, but that takes place after. Probably it will take place in the winter budget. Hopefully, probably in a February-March timeframe, and. Yeah, but no, they don't go again. They go into details on a fiscal stimulus scenario, how big they're prepared how much stimulus they're prepared to provide. But there's really no discussion around what a budgetary constraints would look like in that environment. So again, they're presenting these as options. These can be debated. How big should the stimulus be? Again, they're providing us some indications of what that could do to fiscal bottom lines, particularly debt to GDP, deficit to GDP. But they're not really, again, no details on what that package would be and how to constrain government once we get the economies back up to potential.
And Kevin, just a follow-up question on that. It seems as though, given the scenario, that having guardrails versus an anchor, and I know this is something that Greg is so focused on, the guardrails might be exactly the right approach, just given the fact that there are so many unknowns. So I think some people can certainly agree and appreciate with that. At the same time, though, and you started out by saying you've never seen anything like this before, would it not then lend itself to being different than the past and allowing for some type of economic recovery plan? That is what we've been hearing from Canadian CEOs across the board for the past 6-7 weeks that we've been interviewing. Why couldn't we have seen more?
Yeah, I think we need to have this debate, and I think the way the document is set up, I think they want this debate, the debate we're having right now. Like, if you are going to provide forward guidance in the context of fiscal policy, what does that look like? Those guardrails, are we using the appropriate indicators? By that I mean, again, when you start to see employment rates, employment levels get to certain level, and growth get to certain points in time, do we take the foot off the gas pedal with respect to stimulus? I think from a macro fiscal perspective, that is interesting. I mean, I could imagine, just as the way we were kind of shocked when we were talking about how big the deficit was when we saw the snapshot, that I think our expectations are going to adjust as well now that we start to think about this sort of recovery. We're seeing a medium-term planning framework, like just how big this debt can actually get to. Yeah, I think this conversation is going to be ongoing between now and I think the budget. You tell people that there's going to be $80 or $100 billion worth of stimulus out there, provinces are going to be knocking on the door, so will businesses.
Kevin, great to get your insight and great to get this forward guidance idea put into a fiscal budgetary document. Thanks for joining us, Kevin.